Well, buongiorno, everybody. I am coming to you this week from the beautiful city of Florence, Italy. I actually decided to take a week, go to Tuscany. One of the great things about, trading is the ability to be able to travel and be able to trade simultaneously. So I figured, what the heck? I didn't want to skip a week, so here we are. Let us get to it. Share my screen with you. Hope all of you are well. Been a great time here, I got to tell you. What a magnificent place. The Italians have sort of figured out life in many ways. You know, get up late, work a little bit, have lunch, take a siesta, come back to work when you feel like it. I don't have those same luxuries, but I'm a bit envious in any event. My name is Steven Sitkowski, Chief Investment Officer. Want you to know that everything that we do here is for educational purposes only and not intended as investment advice. So when you think about the market, you need four considerations. First, the fundamental influences. So what's going on in the world that's impacting the market a lot these days. Then you look at overall market direction. It looks like the market's trying to do a little bit better. We look at the sectors of the market, see what you're performing, what you're not. And then we start looking for individual opportunities in stocks. So what's moving the markets? Well, Israel deals with an attack from Hamas. And anytime there's conflict in the Middle East, generally oil prices go higher. And that is what has occurred. Manufacturing PMI came in at 49, which actually beat the previous month. So things seem to be moving in the right direction. We had a monster jobs report last week, 336,000 new jobs created, double what we were expecting. The 10-year Treasury, because of time difference, lag here a little bit. It now sits at 4.667%, and oil had fallen into the low 80s. Now it's at 86.14 a barrel. What to watch this week? Well, tomorrow we have the producer price index. That is inflation at the wholesale level. That's a potential market mover, along with minutes will be released from September's FOMC meeting. Then we have the initial jobless claims coming out, then the CPI number coming out. Both of those are Thursday morning, potential market movers. And on Friday, we have consumer sentiment that'll be released. So a lot of pretty meaty news and important data will be released this week. So be watching for all of that. This was last week's heat map. Good week for Lilly, Tesla. Of course, the defense companies do well whenever there's conflict. So Northrop, Lockheed Martin, Apple had a good week, Microsoft, Oracle. So some big tech again was in the green. Good to see. Year to date, it's been all about big tech. Look at these year-to-date numbers. Meta up 162%, Tesla 106%, Amazon 50%, Google. If you had taken advantage of any of these with the leverage provided by call options, especially, those are generally 10 to 20 times higher than the return on the stock itself. Boy, this could have been a monster year for you, and I hope it has been. Market breadth for the week. Look at the number of new 52-week highs versus 52-week lows. It's been all about the lows. On the NASDAQ, almost 1,000 stocks hit new lows. I'm starting to think this market is oversold. I'm a big believer that the fourth quarter of this year could be very, very good. What is that based on? Anticipation of rising earnings. I think that's a given. The Fed pausing interest rates in November, more than likely. December is kind of iffy. And just seasonality. The fourth quarter of the year is generally the best performing quarter of the year. Market scoreboard. So year to date, Dow's pretty flat. S&P up 12.2%. The NASDAQ up 28.3%. This has been the weakest bear market bounce ever. Look, we're that red down here. So when you get these bear markets, generally the market screams higher. Hasn't happened so far. We'll see. Yield curve indicates that we could have a recession ahead. So when the yield curve inverts and then starts getting back to normal, this is generally when recessions break out. If we do have a recession, I would expect it to be mild due to the very strong labor market. As long as people can get jobs, create an income, and pay their bills, recessions generally don't go deep. Bond market has been getting stomped on. This is what a lot of people don't understand. They think, well, if I invest in U.S. Treasuries, then my money is safe. Yeah, if you hold it until maturity. But the fact is that the bond market since 2020, end of July, is down almost 25%. Treasury keeps printing bonds. They can't get enough, 1.8 trillion this year. So debt interest is on the rise. Pretty soon it's going to be 20% of our tax revenue. That's frightening. We're going to turn around and hand this off to our kids. Lucky them. Well, starting to run dry on our strategic petroleum reserves. We're down to 17 days. And with oil prices coming off their highs in the 90s, OPEC may decide to cut some more. Stocks trading above their 200-day moving average. Look at this. We may be at a low. This could be a contrarian buy signal, which I believe it is. Consumer credit plummets, probably something to do with the fact that we now have the resumption of student loan payments. Credit card rates, they're now up 25, 26%. And earnings this week. Keep an eye on LVMH. They own, that's Louis Vuitton. They own all the high-end brands. Let you know what the high-end consumer is doing. Delta will tell us about travel. BlackRock, investment banking. Citi, just banking in general. Let's take a look at the charts, see what's going on there. Let's start with the SPX. It's the S&P 500. So it looks like, we're attempting this recovery, bit of a rounded bottom. The question will be, can we crawl back above that 50-day moving average? So that's going to be a key level. How about on the Qs? Well, this would be big tech. The drop wasn't as pronounced as the S&P. Still like we're in pretty decent shape here. Soon to cross above that 50-day. Hopefully the 50-day does not act as a level of resistance. And Russell is still lagging. It's improved a little bit, but look at how far below the 50-day it is. So small cap's not been doing well in the expectation of an economy that many believe will weaken. I don't think it's going to weaken significantly, personally. So there are your market insights for the week. I'm going to go tour Tuscany. Hope you have a blessed week, and I'll see you this time next week. Ciao, everybody.